For everyone who knows us already, my name is Max. This is RJ from Express Capital Financing. Our goal today is to help brokers in this space understand our products better, get your applications, how to sift through these questions and navigate and really understand the deal, right? Because at the end of the day, the one thing that we were talking about is no two deals are the same. There's always questions that need to be answered outside of just the standard application. And it's really getting to the bottom of it, which is going to help you get the best answers possible, which is going to help us help you, right? So that's what we're here for today. There is a question and answer box on the bottom. There's a chat box. By all means, feel free to throw questions in as they come, aware to yourself. We'll see them, answer them, and we'll leave some time at the end, especially also for some question and answer. If anyone's brave enough to get on the video, we'll let you guys through too. So let's get started real quick. So let me just go ahead and share my screen. What we're going to start off with first is our hard money application, right? So hard money is used for multifamily mixed use bridge loans, 1 to 4 unit bridge loans. So properties that either need to be fixed, they're not stabilized, and they need to be stabilized in order to get permanent financing. So in short, they don't qualify today for a permanent financing option, and we're looking to put it in the best position possible and either refinance or offset the asset and make a profit from it, right? So we have a few different ways. We have 2 main ways of submitting an application with us. The first way is by going to our website, just to kind of show you guys where to go. If you go to expresscapitalfinancing.com and you hit apply now. Now, again, all these online applications will take you to the same app. They do have some information on the side for you to help you out when understanding our products and programs. But all these pages are the same, right? So once you get here, since we're talking to brokers, everyone's going to select yes. You're going to put your information in here so that we know to contact you and not your borrower, okay? So that's really the first step of the process. As you go through, it'll open up more information. All of these questions can be found, and we're going to go through right now on our own application over here. So whichever way is more comfortable for you, if you're a tech savvy person and like to do things online, by all means, feel free to do it from our website. If you like to kind of have something where you could save it, see it, always change it, and so on and so forth, use our Excel sheet. It's very helpful, and you'll see all the different things that you can use with it. Number one, very simply, the first part of this application is going to be the simplest, is going to be the property's address, the borrower's first name, last name, their email and phone number. Is always helpful. We're going to need it eventually. We don't reach out to any of the borrowers. We always reach out to the broker. So as long as your information hangs out over here, we know to reach out to you and not the borrower. So you have nothing to worry about and can fill that in. Now, once you get the address, it is imperative that you at least Google the address once. Know about the asset that we're talking about, right? Get an idea for what it looks like. Make sure, hey, so it's the beige one with the broken window in the front. Got it. Okay, Google nowadays can let you see everything. Use it, understand what the property you're talking about is. You'll see right away if it's a rural asset or not. And again, right now we're just getting into very basics about looking at it. I don't want to break a property down just from its address, but I want to understand what I'm looking at. I want to understand what kind of property I'm looking at, where it is, and so on and so forth. Where we are in the process, right? This is going to, now I'm going to pause for a second. A lot of these questions on this application are for you, and a lot of these questions on the application are to actually be able to sell the terms, right? When I say for you, I mean in order to be able to get proper pricing, in order to be able to fully underwrite the deal. The other part of it is to understand where your borrower is and be able to sell the terms, right? So I want to know if I'm talking to John Smith about a property and he's about to take up an hour to understand the terms that are available to him. I want to know if he has this property under contract, if he's just getting general information and so on and so forth, right? So again, ask that question. Know who your borrower is, what part of the process they're up to. That'll help you win the deal also by being able to give them the best education that they need at that time, at that step of the process. As is value. As is, and by the way, RJ, at any point that you want to say anything, by all means, feel free to cut me off. I want this to be as much education for them as possible. So being able to hear from two of us, I think will definitely help them out a lot. Now, when it comes to the as is value of the property, that's really just asking them like to understand, hey, are we buying it at a discount? And this is going to help us in many different ways, right? But the main idea right now for us is to understand, hey, are we buying this property at a discount? Are we getting it at market value? Are we buying it for more than market value, right? Especially in today's market, we've seen all those three different scenarios happen in three different markets, right? So that'll help you out in understanding the deal and be able to provide the best terms and not have to go back a day before closing to change them. Purchase price, simple enough. How much we buying the property for? How much do we need to renovate this property? Does it need work even? Maybe it's a quick flip and nothing is necessary. However much that is, fill that out. Now, when you get a big number or a small number, just because you got a number doesn't mean that question is done. Feel free to dig a little bit, really understand their deal, right? In our industry, if you fund a deal, 2 deals a week, you're doing pretty solid. You could probably hit 20, 30 million a year that way, right? But we want it. So in order to do that, focus on the quality, right? Focus on understanding the deal, focus on understanding what the borrower wants to do to the property. So, hey, if we're doing $20,000 of work on a $1 million project, okay, so it's really just like, what are we doing for 20K? Oh, it's just the landscaping. Like, is that all it needs? It's already fixed up. Feel free to question that. No one's going to find that offensive. On the contrary, it's only going to be found as, oh, my loan officer cares about the deal and wants to understand what we're doing here. So find out if it's the opposite. Let's say we're doing $300,000 of work on a $200,000 property. I'm going to ask, wow, so this seems like a gut renovation, right? And right away, all of a sudden, these guys are just going to go ahead and tell you everything that you need to know, because there is always a story to the deal. There's always more information than is just a 50K renovation, right? So each of these should be another question within it, and use them to really understand the deal, because we will ask, right? If somebody's never done a renovation that big and all of a sudden now, and we'll get into that in a few lines from now, but if a borrower's never done a renovation that big, we want to understand, okay, well, why is it costing so much, right? If it's something that's big, that's not a big deal, well, bring that to our attention. But if it's a really big renovation because it's really a gut renovation and everything needs to be torn down from the studs, that's important to know too. After repair values, again, this is a tricky one. And when I say tricky, I mean because we get a lot of information. Borrowers tend to be hopeful when it comes to values because they're always looking for their profits. Try to be conservative, right? If you know the area, try to put your 2 cents in there. If you don't, there's lots of ways where you could check for a quick value, whether you're using Zillow or any other method, just to see, hey, is this even within range or is this completely out of whack? But other than that, there's really not much else to do there. Property type. This is important, right? We want to know what kind of asset we're looking to do, right? Every time I get a question, hey, Max, I have a question about a bridge loan. Don't just tell me it's a bridge loan. Are we talking about a multifamily bridge loan? Are we talking about a commercial deal, right? Is it now when it's commercial? Is it a barber shop? Or are we talking about a restaurant, right? All these questions matter. So knowing what the property is, which goes back to the address. If you Googled it, you have a better idea. But also understanding, hey, what is the actual asset type? How many units in the property? Again, so we can understand if this is going to become a multifamily or does this dwell into a 1-to-4 program. Credit scores, pretty simple, nothing major to do here. And now we're going to get to the actual experience field, right? So now here is where most of the conversation dwells, especially on the first phone call, whether you're just pre-approving them and understanding, hey, is this somebody that I should be working with, or if they actually have a deal and they're looking for funding. What we look for when it comes to a experience, right? We call it a verified flip. how many properties have they had their name, had a company that their name is on the operating agreement of, that they've purchased, fixed, and sold, or purchased, fixed, and rented, right? And if they have rental properties, if they just, bought it as a rental and they've done work, that counts too, but we cannot combine the two, right? So if I've done 3 deals total where I've bought it, renovated it, and either fixed it or held it, and now I also have 2 of those are rental properties, one of them that I sold, I am not going to do 3 and 2. That's adding deals that don't exist under my track record, and those will get caught. And now we're thinking, oh, this borrower has 5 properties, when in reality they only have 3, right? That will cause a change in terms. So we don't want to do that. We want to be as clear as possible. So hey, we've done 3 recent flips, and out of those 3, 2 of them were rentals. Great. Well, I get more credit for a flip than I do a rental. I'm going to keep this at 3. If I also have on top of that other rental properties, then yes, by all means, add them in there. If they've done properties more than 60 from 6 to 10 years ago, you can include those as well. And if they have any licenses, now licenses do have to be active. They cannot be, oh, I've been licensed 10 years ago, 3 years ago, last year. It has to be an active license, whether it's a GC, real estate. These are usually the 2 most common licenses that we see. But by all means, any of these will give a borrower credit as far as having experience in the real estate industry. Rehab sizes. Again, when we're looking at a deal, if it's pretty standard, usually this does not play a big part, right? If it's a 30, 40, 50K renovation, okay, so be it. When you start getting into lopsided deals, right? So that means that your renovation budget is greater than your purchase price, or you're getting into a deal where the renovation budget is just really large on its own, right? That's where this really comes into play. We want to understand, hey, we know that this borrower has done 5 deals, and I've seen this a lot. I've seen borrowers that come in with 10 deals experience, and those 10 deals were maybe done in a Atlantic City, and they've done $5,000 renovations on all of them, and now all of a sudden they want to go in and do a much bigger project, right? And now to you, you're saying, oh, wow, my borrower told me he's done 10 deals already, and now he's looking to do his 11th. He should be able to get the highest leverage, yada, yada, yada. But all of a sudden you realize that these deals are so different from each other. You realize that, hey, Atlantic City, those were 5K renovation budgets. Now we're doing 150K reno on a $100,000 property where it's lopsided and all that. Understand that, right? Know about that. Hey, this is a step up. They're still going to get credit for their experience, but it's better to know about this up front than it is to find out later on. So, and a lot of the times, by the way, I'll actually make my borrowers fill out a track record. If they're starting to start circling around this question, here's a track record template, fill it out, send it back to me. And then this way I can review it and go over with you. I'll see right away on that track record, okay, this is what was done. This is how much they spent, yada, yada. And I'm going to base it on that. And that's what's going to help me move that forward. So just a little bit of an idea there. Liquidity. Liquidity is, again, we don't verify this information when it comes to liquidity on bridge loans. Why do we ask it? We need to know, hey, does this borrower have the capacity to complete this deal? Do they have the down payment? Do they have the closing cost? Do they have everything that's necessary? Do they even have a little bit more, or are they going purchase broke, right? Don't forget, at the end of the day, as their broker, they are looking to you to give them the most accurate advice and information. They need you to help them navigate through their deal. So they're going to want you to really give them that information, to tell them, hey, look, we need more capital on this one, because once you buy it, you're not going to be able to start the work, whatever the case may be. Guide them through it, right? Don't just, the best brokers that I've dealt with are the ones that have control over their borrowers. And I don't mean control in the sense of, oh, they could get them to do whatever they want. No, I mean, the borrowers respect their opinion. And because of that, they're going to do what the broker tells them to do, because the broker has what's best in mind for them. Net worth. This is something that can help a file if they have a strong net worth. It doesn't really affect the file unless you're going into multifamilies and bigger type of projects where loan amounts are exceeding $1 million, that it's absolutely necessary for us to know. But again, you should never have a blank spot on an application. I will reiterate that as many times as possible. The more information you have, the better off you're going to be, the more informed you're going to be. And I would rather be a little bit more informed than slightly uninformed. Loan request, right? I'm sorry, the loan type request. Are we doing a purchase or a refi? The exit strategy for flipping it or planning to refi, right? Because if we're planning to refi, we need to also underwrite and make sure that they're going to be able to exit that deal okay with the refinance, making sure that the cash flow will make sense for that deal on a debt service based loan. But if they're just flipping it, we're just going to look and make sure that there is a profit in that deal. Entity names so that we can fill out information properly. We have, pre-approval letters and things like that we're going to be drafting for the borrower. Earnest money deposit. If they put money down, we want to make sure that they have, again, an accurate number for how much approximately they're going to need to close with their EMD money already placed there, right? If they already put down 5K and they don't realize that, you might lose the deal just because you came in $5,000 higher than the other broker, right? So these are all important information for the deal. Where did they source the property? This is actually something that we do need to know. We will ask it at some point of the deal, mostly because if it's a auction property, we need to know that there's certain timelines that have to get hit. There is limited ability to slack on those, right? If it's a wholesale property, we need the A to B and the B to C contract, right? So there's different scenarios that require different ways of approaching them. So understanding where they source the deal is going to help us drastically when servicing them and making sure that the deal gets funded and closed on time. If the borrower is a citizen or not, again, I think that's pretty straightforward as to why we need to know that. Now, does Express Capital Financing lend to people that are not U.S. citizens? The answer is yes, we do. They have two requirements. The first requirement they have is they need to be legally allowed to be in the States for the duration of the loan. If they're taking out a 12-month loan, they need to be allowed to be in the States for 12 months. If they're taking out a 30-year loan, they need to be allowed to be here for 30 years. The second requirement is that they need to have a social security number with a credit score, right? So two things: allowed to be here, social security number with a credit score. If we have those two things, we can now go ahead and lend to this borrower. Delinquencies. Do we have foreclosures? Do we have bankruptcies or anything like that? Let us know up front. We want to fund files. We get paid to fund. We don't get paid to deny, right? So tell us the full situation. Be transparent. Tell us where where the borrower is falling short, where they're having trouble, and we'll be happy to advise. If it's not possible, it's better to know now before they've spent their money and time and our time, right? And if it's not possible, we'll try to help set them up so that whenever they can do something, we're going to be right there, ready, willing, and able to help them, right? So usually when it comes to foreclosures, bankruptcies, we want them to be about 4 years. That's the general rule of thumb. But again, talk to us, let us know if it's certain products have certain flexibility, certain products don't, but we will always do our best to help you and the borrower. Now, whenever they chose that the loan is a refinance, our sheets will automatically tell you that there's certain information that's required, right? So as we're filling this out, it's telling me, hey, by the way, this is a refinance. Give me this information to be here too. We need to know this, right? We need to be able to tell if the property's seasoned or not. Different programs require different seasoning periods. So we want to be able to make sure that whatever we're providing you, it's going to work for that property. So let us know when the property was purchased, how much they've spent on improvements on the property. And again, by the way, really quickly, I'm going to move back for just a moment because this is important. If I chose refinance, I'm not leaving the purchase price blank. Okay, again, if I chose refinance, I'm not leaving the purchase price blank. We really need this information. This is what's going to help us help you. There are certain times where seasoning doesn't matter because the values are close enough based on where they are, and we will be able to push something through or provide an offer that'll still work for that borrower. So help us help you. Current loan balances. How much do we owe on the property? How much are they currently paying in their rates, maturity dates, so on and so forth. This should be pretty self-explanatory. Now, if I chose that I'm doing a multifamily property, right? So 5+ unit. This should have a drop down. I'm not sure why. But now that I did this, look what it's going to tell me. Hey, I need to know about this information too, right? It's telling me right away that there's certain information that's required. We're trying to do the best we can here to make sure that you guys know where to fill out what. So if it's a 5+ unit, you're going to tell us, hey, how many of their deals were a 5+ unit? Now here it's okay to double down, right? If I've done 3 total deals and 2 of them were multifamilies, it is okay for me to put here 2 now and have that marked off, because now it is not going to treat it as 5. This is a separate thing. Now, number of units that they've done. Why is that important? If somebody's done a 5-unit multifamily deal and now all of a sudden they present you with a 100-unit deal, that's a very big step up, right? And we're not going to want to see that. We want to see experience close to what they've done. So in that regards, ask them, hey, what's the biggest project that you've worked on? Have you done a 50-unit before if they're doing 50 units? No, but I've done 40. Okay, close enough, right? If they've done, generally we like to see people that have done, let's say 2 to 4 units, and now they're trying to get into the multifamily space. We'll let them go up to a 7-unit without issues, and things like that. But we don't want to see them go to a 30-unit right away. That's just going to hurt them. There's too many differences in the project type that they're not going to make out okay there. So we'd rather see them take on a deal that they can work through and get through.
And to add to that, Max, one of the biggest issues that we're running into in trying to get term sheets back to brokers quickly is usually inside of the experience part of the data. Specifically when we get into the parts here on the bottom that show up as required after an indication of a particular property type or a particular strategy, we're really not getting that information. And I do understand that it's not the typical information that you might seek out when you are interviewing your clients, but it is actually very important because the deal in terms of the structure, in terms of the leverage, is really, really tied to those indicators, right? So we always have to come back. And then what you have to understand is when we come back to try to get that data, or we have to make an assumption on that data, which is even worse, then that causes time, because then when it's returned, well, by the time you return it, 3 or 4 or 5 other deals have jumped in front of your deal, right? So that's why it's very important to nail this stuff down on your initial interviews and your initial submissions.
Take an extra 5 minutes and get it done the first time will save you hours on the back.
And it's important, right? And it's important for you also as a broker, because it really gives you an understanding of your client's profile, and will help in being able to determine what lenders you should place a loan with.
100%. And on top of that, also, it's just like I can't stress this enough. I've probably said this 100 times on this webinar alone, but understand the deal. If I'm not understanding the deal or just slightly off from it, I can lose that deal to somebody who took another minute or two and spent more time with the borrower on the phone. So those extra minutes, I know they seem long and daunting because you have 5 other people to get to, but if you have someone serious on the phone, someone that this application is going well with, take that extra minute, take an extra 5 even. It's okay. I guarantee you, if you'll close more that way, giving the borrowers the attention that they need and the deal the attention that it needs. Additionally, I skipped over this a little bit, but when it comes to 5+ units, or if I chose that my exit strategy is a refinance, it's going to ask me for the fair market rents, taxes, insurance, HOA fees, and current rents, right? This is so that like we said earlier, so we can calculate and make sure that the debt service makes sense on the exit strategy and the borrower can get out of the deal. We're not just here to give money. We want to make sure that they can exit and pay it back okay without having to give up an arm or a leg, right? So, and that was a joke. When it comes to new construction, I know Aldon's actually on the phone with me. I know he had a lot of questions about this, right? What does Express Capital look for on new construction deals? So our rule of thumb, our number that we put out there is we want to see 3+ deals from a borrower that they've completed. Again, that means that their name was either on title, their company name was on title, and their name is on the operating agreements, and they've done ground up construction. Now, are there certain times where rules can be where we can move through that? Yes. It is definitely more tight now than it used to be. I used to be able to push people through with a lot of fix and flip experience and things like that. We really do need to see ground up experience here, at least one. If they've done some tremendous rehabs where maybe we would consider them ground ups because of how much they were torn down, we could look at those. In those scenarios, the way I like to say it is it's case by case. And I won't really look at the deal much first. I will look to get the borrower approved by us first and get a pre-approval and make sure that we're willing to work with them. And if the answer is yes, then we can go into the deal and start to break it apart and make sure it makes sense, right? But I generally want to get these guys approved first, make sure that it makes sense, that they have enough experience. Ground up construction is not a fix and flip. It's not something that's as simple. There's so many more moving parts. I can't tell you how many times I've spoken to people who are in a bridge loan for 2 years longer than they wanted to be because they couldn't get their permits in time because they didn't understand that the process was much different on a ground up project, or many other parts of the project actually that could just stall and take time. So we want to make sure that they know and understand the processes that go through that happen throughout a ground up project. GCs, I get this question a lot. I would say when it comes to GCs that have done ground ups for their clients, if they can prove something, to have documentation is key here. We can, again, case by case, look at it and give it a once over and let you know what we think before we go ahead and tell that borrower to start putting, properties under contract, thinking that we're funding it. So that answers that question. So we want to know, again, how many deals they've done, how many units they've completed. We do as well multifamily ground ups at the same time. So that's why it's important for us to know, hey, are they just a 1 to 4 unit ground up guy, or do they usually do multifamily big projects? That'll definitely help. And by the way, if somebody, I think this goes without saying, but I'll say it anyways, if somebody has done a lot of ground ups, but now they're looking to do a fix and flip, that is yes, that is a stronger experience than a fix and flip. So that will definitely count. Approved plans and permits. Definitely ask that one. That will help with leverage. That'll also help understand, especially if they tell you it's a refi, but they don't have plans and permits approved yet. Well, why do we want to close so quickly? Why do you want to pay interest on funds that you own something right now outright anyways? Let's wait for that before we close, so that your client can be as profitable as possible, right? Why pay money while you're waiting for Uncle Sam to do their thing? And now on the bottom, what we also have here is if you have somebody that wants to do multiple projects at the same time, it doesn't mean that we're going to for sure portfolio it. It doesn't have to be a portfolio, But here's a way where you don't have to fill out, 5 of these, let's say, applications for one person if they're doing more projects. You put each property address here, the purchase price, rehab budgets, as is values, and it'll also give you and it's pretty much asking all the main questions, and it also breaks it down by, hey, if it's a refinance, make sure we answer these, and if it's a rental property or 5 or more units, please enter this information here as well. And this will give us also total summaries, so we know exactly what we're looking at from a global perspective as well as a property individual perspective. I'm going to give you guys a minute to ask any questions on this. RJ, if there's anything that I missed or anything you want to add in there, by all means, feel free.
No, that was pretty comprehensive, Max.
I hope so. I'm really trying to break each thing down as much.
But again, just to reiterate, the purpose of being able to do this and to gather this data correctly and as efficiently as possible is so that you can really get through the sizing of the deal and get term sheets in front of your clients as quickly as possible.
Yes, sir. We'll give you guys another 30 seconds for questions. And I'm not going to go as detailed on the next application because I think we kind of covered a lot of the main talking points there. So by all means, guys, if there's questions in regards to products or programs, like bring it on too. We're here to help. We want to make sure that we're giving you guys the information that you want and need to succeed. Should trademark that one. Okay, so now, in addition, just the one small thing that we didn't cover, you have over here also partner information. We can mix, not mix, we can use a borrower's credit score and one borrower's experience, let's say, for example, to make a better file. So if there is a partner, make sure to give us their information as well. If they've done some, if they have the experience, this guy has the credit, we'll see that. We'll make a full file and make sure that we're giving them the credit that they deserve. So these are pretty much just the same questions for the borrower that you saw on the other side. And then you also have a place to put your information so that we make sure that you're on that deal and you're secure there. All right, since we got the hard money out of the way, we're going to go over to our rental sizer or application. One thing that actually me and RJ were talking about today, we understand, I know that we're probably not the only lender you're working with. That's okay. Now, I'm sure you probably have other lenders doing something, well, probably not as comprehensive as what we're doing now, because we like to really go above and beyond. But we know that other brokers also, other lenders are also giving you applications to use. By all means, I don't need you to use my sheet or my sizer or whatever it is. I'm just trying to give you guys extra tools really by giving you this. However, make a full application for yourself that covers my questions and their questions and the other lenders' questions, because this way you're not having to go back to your borrower. You don't have to re-underwrite the deal every time you talk to another lender. So make a bigger one. By all means, you can always go ahead and add more lines to mine if there's other questions that you want to ask them. Like, play around with it. There's no right or wrong there. Just make sure that our questions are there, or else we're going to send it back to you, right? So Gregory actually has a question. I'm going to allow you to talk. You might have to unmute yourself though.
Yeah, it was an accident. I was trying to take the hand off, but great presentation. I'm listening. It was an accident.
Great. Well, glad to hear that.
All right.
Thank you, Gregory.
Question, feel free to raise your hand again. All right.
Yes, sir. Thank you. Mm-hmm.
Okay. So, all right. So now to the rental property application. Okay. We are going to go through this one a little bit faster just because we're a little bit short on time and everyone has things to do, as well as we covered a lot of these questions already.
You want me to do it, Max? Because I know your throat might be a little. All right.
Yeah, go for it.
Fantastic. All right, let's go. So, of course, 2 sides as you know, bridge and permanent. Pretty much every bridge deal, every value add short-term deal goes on the application that we just did. This is every stabilized rental property. So property address, you know, first and last name, you know, of course, phone number, email, address. It's helpful if you give that information to us. We're not going to contact your borrower. If we do need to contact your borrower, we will ask you first. And in some cases, I know many of the brokers I work with will allow that, but we won't do that without you, right? So feel free to put the information there so that if we do get a chance to issue a term sheet, we can issue a comprehensive term sheet in one shot. All right, credit score, get a good estimation. If you're unsure about it, please feel free to have the borrower run their own soft pull. We're going to start with a quote, but of course, when we get to pull in the credit, and it's is that Gregory?
I just muted him. Yeah.
Okay, got it. All right. Yeah, so when we get to pull the credit, and if it's lower than what you stated, then of course, you know, then that's the situation. Loan type, you know, that's refinance and purchase. And again, depending on refinance and purchase, I don't believe there's any triggers in this, but there may be. All right. Property type, Max.
I'm with you.
Yeah, just click on it. Yeah. All right.
Well, if we do choose refinance, again, it's going to trigger over here.
Got it.
Your questions down there.
Mhm.
And one thing, by the way, I'm sorry to
No, please go.
on the credit score, guys, this is important. This is not a bridge loan. This is a permanent loan. Credit scores are a lot more important here. I know RJ said earlier, have the borrower run their own soft pull. That's a great idea. On top of it, you want to take it a step further and really be sure. Because again, these soft pull things are not always accurate. Ask us to do a hard pull for them. They won't have to do another one, right? So especially if the leverage is important or the rate's important, let's get that up front. This way we're not baiting and switching or making them feel as if that's the case by any means.
All right. Next is the number of units. After you pick property type, right? Show property type again, Max. Drop down. All right. So there's a lot of different things happening here. And I want to draw your attention to mixed use. This is very important because the difference of this 1% in mixed use square footage will make a very big determination in the deal. And we can simplify it by saying, if it's more residential, then that's going to take priority. And we're going to look at it more like it's a multifamily or a residential type of deal, right? If it's more commercial, then it really becomes a commercial deal. And there's really big changes once that occurs. So that is extremely, extremely important for you to nail that down. All right. And then, of course, retail, office, industrial, self-storage, assisted living, shopping center, non-warrantable condo, daycare. Now, for those who had questions about our loan programs, this right here gives you a good demonstration of the asset types that we will consider to fund in one way or the other. Our product offering is so incredibly broad. Most of our competitors are very niched up. They're only going to do 1 or 2 or 3, 4 of these things. So because we're so broad in the asset types that we're going to fund, right, it really requires you to nail down the information to help us kind of zero in and where the product is going to go. Again, that gives you a good idea of the type of deals now that you are able to actually say, yeah, you know what, I actually do have an option for this. All right.
Bring our attention to the non-warrantable condo for a moment. That's another big one. Most people might not know what that means, and that's okay, right? But we want to understand that first, because a warrantable condo fits here and non-warrantable condo fits here. They're very different types of loan products that they're going to fit into. And again, if we start the wrong process, it would have to restart all over again, and nobody wants to do that. So best to ask. If they don't know, ask the realtor. If the realtor doesn't know, ask the HOA.
All right. Next, estimated property value. That's pretty clear. Purchase price, again, to reiterate from what you saw on the bridge pricer, regardless of whether this is a refinance or a purchase, we have to know what they paid for the property. That's including if they purchased a property 25, 30 years ago, 50 years ago. All right, we have to know what the purchase price was. Current monthly rent. Now, this is extremely important because this is where our debt service ratio is going to come from, which of course is one of the key qualifiers in the rental pricing. All right, so this you have to know, nail it down, current monthly rent, and also the projected fair market rent. All right, these come into play a lot, especially because, and again, one of the things that we're able to do that a lot of other lenders may not be able to do is we're kind of flexible on seasoning out of a rehab into a perm. All right, so the property may be in transition to where tenanting is taking place when we have the deal, right? So we need to see fair market rent. And so, you know, the appraiser is going to verify fair market rent. And at that point, whether it is the lower of the two, fair market rent, or the actual rental amount is what will be used to qualify.
And just to add on to that last part that he said of what we're going to use to qualify, if you notice, I was building out a scenario while he was talking, just to give you guys some color on this. If I have a 4-unit property, I did this backwards, but let's just say I have a 4-unit property and 2 of them are occupied, right? Now I'm currently collecting $1,000 a month in rent because only 2 of them are occupied, so $500 each. And now my other 2 are going to bring me another $1,000 or $550 each. Well, we're going to use 90% of the difference, right? So in this scenario, we're going to use 90% of 1,100 plus 1,000 towards the rent on the debt service ratio. All right. So we are giving credit to the rentable units, not 100% credit, but they do get credit. But it does not. But if I'm renting out a unit for 500, but the fair market's 1,000, we got to use the 500. The only time we could use the fair market and 90% of it is when it's vacant.
Max, if you could just add another minute just to quickly summarize how Airbnb deals and short-term rentals come into effect right there.
That is actually an amazing question. We're seeing a lot more of those. So when it comes to Airbnb properties, there's 2 scenarios. There's a purchase and a refi. On the purchase, I really don't care, right? Why do I say that? I don't mean to be rude, but it's just simple. It's not going to, we don't have any previous numbers of it operating as an Airbnb. So the only thing we could look to do is qualify it the same way I'm qualifying this deal over here, which is based on its 12-month fair market rents, right? We're going to look at the fair market rent in both scenarios. So why pay a higher rate for an Airbnb if you could just qualify it over here under the basic terms? Now, if I'm doing a refinance, right? Now, if my refinance is less than a year of me operating it as an Airbnb, I cannot use the Airbnb rents because I need a full 12-month history there to show. But at the same time, in both scenarios, we still want to understand the fair market rents, right? Why? Not every Airbnb stays an Airbnb for the rest of its life. Not every area is consistently going for the next 30 years going to be an Airbnb territory. And what if, God forbid, again, we always have to look at it as the lender. If we have to take over the asset, how are we going to operate it? We are not going to operate it in Airbnb, right? So we have to understand, okay, what does the fair market rent mean? Could we cover at least our debt there so that we're not in a bad spot? So the fair market rent is still always important. What is the idea behind the Airbnb product? Why is the Airbnb product special if everything I'm telling you right now is, hey, we're using the fair market rent anyways? The key factor here is that on a refinance, we cannot have vacant units, or at least not more than 75%, 25% vacancy. On an Airbnb loan, those are going to be vacant properties. So we can refinance them, being that they're vacant, and we will use the fair market rent, and we will look at the Airbnb's 12-month history. But between those two things, that's what's going to allow us to lend on that asset. Right?
Yep.
I hope that makes sense.
All right. I did say a minute though, and you took like 3.5, Max. I'm kidding. All right. Annual taxes. Again, these are key qualifiers that are going into the DSCR. And insurance. One note there. We're not taking even on multifamily deals, especially the smaller multifamily deals. Our preliminary underwriting is just going to really look at taxes and insurance, and especially on residential, and not really on the full expense breakdown. We will make some assumptions in some of our loan programs as to other expenses. HOA, if there's HOA involved. Do you own a primary residence? Again, another question that brokers typically do not answer or send to us, that causes us to have to go back. Really simple. Do they own a primary residence or not? That's a Y or an N, or a yes or a no. All right. Number of rental properties owned currently. Another very important question that we never have on initial submission. Number of rental properties they own goes along with what we discussed early in the bridge. But this is the key thing here, because we're not looking at any rehab experience, but we do want to see rental experience, right? If there is a key thing in terms of experience, even going back to the previous setup with the bridge setup, zero experience will still fund deals, right? But more experience gets better pricing. All right, owner occupied, if so, which units, right? We're an investment purpose lender, but there are situations where owner occupancy will be considered. Max, could you take 1 minute and just touch on that?
On which part? The owner occupied?
Yes.
Yeah.
When is owner occupied appropriate for us?
Am I allowed a minute and a half now, or?
I'll give you 1 minute,
So,
20 seconds, Max. Let's go.
let's do it. So on the owner occupied, I'll probably keep it less than that. Very simply, on the 1 to 4 units, the answer has to be no, or else it's an absolute no from us. We cannot lend on residential owner occupied properties. The only time that we can lend on an owner occupied property is when it's a commercial asset and they are operating a business out of the property. If they are, if it is majority owner occupied, we will need to see 2 years of either business and personal tax returns is option 1. That's called a full doc, which will get you a better rate. Or we could do 12 months bank statements, which will get you a slightly higher rate, but we'll still get the loan done.
Perfect. That was under a minute. All right. Liquidity and net worth we discussed earlier. But just so that you know, we do like to see 10% of liquidity for 10% of the loan amount in liquidity on these rental deals. Citizenship we touched on before. And then let's look now at the preferred loan program, doc types, prepayment penalties. Now, if you leave these blank, we're going to make assumptions, which in many cases is okay here, right? You may not know specifically what works. So, you know, you can leave those, at least preferred loan program, doc type, prepay penalty. These aren't absolutely necessary. All right. We're going to just try to bring back the best fit based on the assumptions that we're making. However, if you do have these specific requirements and your client has these specific requirements, this is where you indicate them. If they want to be in a 30-year fix, if they're looking for an interest-only deal, if they don't want to show any docs, which is our typical loan, if they decide that, hey, they can show docs. They want better pricing because they can show docs. That's where you put that prepayment penalty. We have some flexibility here on prepayment penalty.
We actually have some new options that are not added to here yet. And when we send you guys this document, you will have it there. We've introduced now a 1-year prepay. So we have the option of we call it a 100. The 00 is just to show that there's nothing afterwards. So it's a 1 year, 1% prepayment penalty, or we have a 1 year, 5% prepayment penalty. So those are the two new options that we've introduced, which you could cut with the way I've been presenting it to a lot of my borrowers is as a hybrid. You have the option to stay in it for the 30 years, or you can get out of it quickly if rates drop. Now, I know RJ said that these are not necessarily always necessary, and that is accurate. I would agree with that very much. However, one thing that I would say helps me win my deals is pre-qualing and selling the terms before I even get the terms, right? So if I can have that conversation with my borrower and say, hey, if I bring you a 30-year fix, are we talking or walking? We're talking. If I bring you a 5-6 arm, we talk. No arms. Great. I understand that now. So just because you don't need to answer the question doesn't mean you shouldn't ask the question. Ask it. If they tell you they're open to everything, great. Leave it blank. No problem. But if they get a really high emphasized yes on something or really emphasized no on something, get rid of it and tell us that it's not the case, right? Because if you tell the borrower does not want to see a 5-6 arm and I go ahead and present to you a 5-6 arm now because I thought that was the best scenario for him, they are now not going to want the deal and they're going to make both of us look bad, right? So get the right information and ask it. Doesn't hurt. Hey, do we want a 30-year fix? Do we not? How do you feel about prepayment penalties? Oh, no, they're fine as long as I get the best rate possible. Great. Let me know that, right? And that really is, like I said, the more information you give us, the more filled out this is. And I can tell you that is an absolute stat. The more filled out our applications are, the more probability that loan has of closing.
Absolutely. Okay. Entity name, you know what that is. Earnest money deposit, total square footage. Total square footage, important. The underwriters are not looking at deals without this info. And again, it's something that is typically not included by a lot of brokers. So please pay attention to that. In terms of, one thing I typically have to do is go looking up for a property when I decide that instead of me trying to get the information back from the broker or sending it back, now I go looking this up myself, right? Which costs time. Right, so try to have this information so that we aren't forced to use up time doing things that really could have been covered up front and should be covered in your initial interview. All right, short-term rent, monthly rent. So that ties in again with the short-term rental program, right? So if this is an Airbnb or another short-term platform, please have that information, right? If you clicked on refinance up above, then you need to complete the if refinance section, and that again is going to go back to the date of the acquisition. So right, so if they did buy this property for $40,000 50 years ago, this is where you would put that date. The cost of improvements completed, very important in deals that are young, meaning properties acquired within the past 12 months. Now we are looking to justify the value add, and we want to be able to backtrack with this simple equation to see if a deal is viable, and that's the purchase price plus the amounts of improvements completed, which we're going to consider at that time to be the as is value. Well, that's a little bit of a gray area in that short time span, but you get where I'm going with that. Anything with that, Max?
Nope, you covered
All
that
right.
one.
Existing lien amount, of course, we need to know if we're paying off. who holds the current mortgage, what's the current rate, and when does the mortgage mature. This is important so we can understand motivations of the borrower. All right. And really, if this deal is beneficial to them, which is very important. On the multifamily side, again, information that we rarely get that I usually have to go back for. And it's the number of multifamily deals completed. All right. If they've had several projects that are 1 to 4, and now we're looking at a 12, 14 unit, 16 unit, this is an extremely important data point, because the deal will actually hinge on it. We're likely to say no to a sponsor who is now purchasing 30 units, whose highest experience level before was a 4 unit, right? But that's not necessarily a bad thing. That's an opportunity for you to educate your client and say, hey, I think, you're going a little bit beyond of what you're qualified for. Let's do a 10 unit deal, right? A 12 unit deal. Come to us and say, hey, what deal size would work for this guy? And that way you can go back and provide some value to your client.
Absolutely. Well, guys, we'll leave a couple moments open for some question and answers. There's definitely some products that we didn't go over applications for, such as portfolio data tapes and rent rolls, but we got to leave some information for the next one. So stay tuned for the next webinar. We like to try to get one of these broker webinars done once a month. So we will advertise it. We will shoot out an email and put it on our social media. If anyone has any questions or they have a deal they want to run through, you could feel free to reach out to myself or RJ. So our information, you could reach info@expresscapitalfinancing.com, and that's our main place where you'll get assigned. But if you have a question for myself or RJ, I'll put my info in the chat box. RJ, do the same if you don't mind. And I'm actually going to use my short email. They both get sent to the same inbox.
And if you're on social media, I'm easy to find. LinkedIn, Twitter, Instagram, Facebook. It is at RJ Dillon, CRE. All right, and I'll put that in there also, so that if you're on any of those platforms, definitely give me a follow. I will follow back.
I put it in there for you already.
Oh, you did?
I did.
Oh, lovely. All right.
All right, guys. Well, if there's any last 30 seconds for questions, if anyone has anything, please do let us know. And all of this information, by the way, that we went through can be found on our website. All of our products and programs are here. Do not fill this out. This is for our clients, so we can do lead captures. Here is where you'll see information, our rate and term sheets, our guidelines. You can find over here, which has our minimum loan amounts, maximum loan amounts, LTVs, all the good information that you need to know. And lastly, if you really want to go ahead and really do more due diligence with your borrowers, we have deal calculators, which is a fix and flip calculator, and a rental property calculator, which will tell you your DSCR, it'll tell you your cash flow, your cap rates, all the fun stuff that investors like and love to hear, so you can be the educated broker. Well, until next time.
All right. Thanks for joining, everybody. Have a good night.
Hey, let's see if Gregory has a question this time.
All right, here. I think he hit it by accident. No.
Not this time, man. Great presentation, fellas. I mean, I couldn't put it in no, a Q&A or the chat. Great presentation, and I would definitely be in touch.
Thank you, Greg. I appreciate it.
Yes, sir. Y'all have a great rest of your evening.
Where you calling from, Greg? Where you joining from? What's your location?
I'm New Orleans, Louisiana, man, and I'm ready to get it popping down here.
Okay.
You know what I'm saying? I definitely would be in touch. Yes,
all right.
sir.
All right.
All right,
y'all.
y'all.
A lot of those Airbnbs and rental properties right now.
Yes, it's booming.
Beautiful.
Yes, sir.
Well,
all right, man. Y'all have a great one. I'm at football practice right now, but I will reach out, hit y'all up on LinkedIn, hit the information, and be in touch.
All right.
Yes, sir.
Have a
Yes,
good
sir.
night, everybody.
Good night, everybody, and stay safe.